Hello trading friends and welcome back to Forex Focus, brought to you by IG. Taking a look at crude oil in the US dollar in light of a bunch of recent news bringing crude oil through highs not only on the year but going back to October, getting above $85 a barrel. Where that leaves US dollar seeing some weakness in the same time that crude has had another leg higher. Looked like it was going to top out at 85, but in recent trade getting up to 86.5, depending on what futures contracts you're looking at. But the active WTI crude oil getting up and beyond 85. Now wondering, where is the top here? Is it 90? Is it right here at 86.5? We're going to analyze a bunch of it, as well as its ties to the U.S. dollar and what could happen if we get a stronger dollar, given all the Fed speak. So many different angles here at play. But let's start with the crude oil price action. Like I say, getting above $85, hitting new highs since October. And you can see in the September-October range, those highs not very far from where we're trading here, just above 90. We'll do a little bit more analysis on those historic prices in just a second. But how did we get here, and how are we moving so violently from, it was just a week or two ago that we broke through the 80 price level, tend to trade in $5 to $10 ranges for a couple of weeks, as you can see throughout February and most of March, traded in that 75 to 80 price range, quickly through 85, and now wondering if the next stop might be 90 there. As there's a couple of angles here. There's the supply side of things, and given the Russian refineries that continue to get hit in the Russian-Ukrainian war, as well as and I know that Israel, not the biggest oil producing country in the Middle East, but you do have war in the Middle East, and how that might affect Saudi Arabia and Iraq and Iran and different OPEC members. Those fears starting to grow as that war is ongoing and escalating recently. But then you also have the demand side of things with U.S. and China. U.S. obviously has had strong data points throughout this year so far, and a lot of forecasters saw U.S. industry slowing here in 2024, but the GDP numbers are strong. A bunch of U.S. data points are strong, and so what they might have translated in the latter part of 2023, as you see crude oil trading around $70 to $75, and now the pickup in the first 3 months of the year here in 24, alongside that strong U.S. data, is a continued demand for crude oil. As well as in China, some of the data points there in China and the Chinese stock market just starting to pick up a little bit here in the last month or so of trading. And obviously, historically, China has been a big demand side effector of crude oil's price. But let's take a further look at the supply side, because yes, you do see the United States, by far and away the top oil producer, and they've done a lot in recent years. Since the pandemic and since the Russian-Ukrainian war, especially, that started a couple of years ago, they've done a lot to escalate their crude oil production to fit the potential need for it globally if supply was going to be hampered, because you have Russia there at number 3. But now you also have other OPEC members like Saudi Arabia and Iraq that can get tangentially affected by the war in the Middle East. And so, now having to monitor both wars there and their effect on essentially 3 of the top 5 oil producers. But obviously, from what I could tell, the biggest one has been news around Russian refineries. Whenever you see those getting hit, that has been correlated to some of the recent run-ups in crude oil's price, but also recent news that the OPEC leaders not looking at cutting or lifting the production cuts, in light of where Russia's at or any of the Middle Eastern countries are at here. And so that has also lifted the price a little bit, as they don't seem to see a need to make up for the increasing crude oil price with more production there out of OPEC. But we'll see if the U.S. continues to increase their production because, crude oil prices have not been much higher than this since the outset of the Russian-Ukrainian war around 2 years ago. As you can see, the high has really been around 90, and we got above 90 briefly in that September-October range at the outset of the Israeli-Hamas war that has now been ongoing as well. But crude oil then moved back down to more historically normal prices. The long-term average for crude tends to be around $60, $70, $80 a barrel. But you see once again on the ascent, and that $90, like I alluded to earlier, will be a really interesting price level to see if they not only get there, but are able to get beyond, because, you go back 2 or 3 years ago and we've gotten into that triple-digit territory in crude as we came out of the pandemic and into that Russian-Ukrainian war. But what's also interesting is the effect on U.S. dollar, but also price action relative to the U.S. dollar, because you would think conceptually or theoretically that, okay, it's a commodity here priced in USD, and you've probably heard people in the past say, there is an inverse relationship there. A stronger U.S. dollar, all else equal, means a lower crude oil price and vice versa. And you have a negative correlation historically. But what's been really interesting, and of course, you can read all about relationships and everything else in textbooks and have these cliches to live by, if you will, of how these relationships are supposed to go. But then you can go to the market and trade it and see that the context is different every single time. And the context here has been that you have a diminishing negative correlation here. It's getting close to no correlation between dollar and crude oil, from historically being pretty negative. And I think adding the context in of, okay, well, a lot of what's spiking crude oil's price, these wars that are going on globally, none of them are happening geographically, at least, anywhere near the U.S. And so the U.S. dollar has also been a little bit of a flight to quality when you're seeing escalation in Israel or in Russia of those wars going on. You're seeing some selling of those foreign currencies and buying of U.S. dollar. And so U.S. dollar and crude oil actually able to both see some bullish action recently. But in the most recent trade, the last couple of days, and I wonder if the correlation is starting to turn here, the U.S. dollar has been pulling back a little bit, as you have the euro up about 100 pips in the same time that crude oil is breaking through $85 a barrel. And so we'll see if now the crude oil story is taking over a little bit, and crude oil on the way up is pushing U.S. dollar lower, or if they're just going to be uncorrelated and they're doing their own thing. But you have seen, obviously, crude oil getting up to $85 a barrel coincided with this euro falling all the way down below 108. But that being said, the last 2 or so trading sessions, you've seen that relationship pick back in line of crude oil getting up and beyond 86 and U.S. dollar pulling back, and this euro getting back up to 108.5 in that territory. But we'll see where we go from here. Another leg higher in crude. U.S. dollar seeing a little bit back and forth, but the U.S. dollar price action not really affecting that strong crude coming off of the OPEC news, the increased demand in the U.S., and the ongoing wars in the Middle East and Russia.